Hello investors and traders, and welcome to the weekly market report with the market guys. I'm AJ Monty. This is a 1-year daily candle chart of the Dow Jones Industrial Average ETF, ticker symbol DIA. And what we're looking at here are the lines that I drew from last week's forecast stating that we would most likely drop. Now here is the candle from Friday of last week. And we had a shortened trading week because of the 4th of July celebration. So this was Monday's candle right here. So we dropped a little bit. We didn't quite go all the way down to support, but support down here did hold. And that's the important thing to keep in mind, because that support level is going to remain on the chart as we move forward. This line up here is a resistance point that I drew. So the markets are pretty much stuck in this trading range. From a low down here on the Dow of 23,800. Remember, the diamond is 1/100th of the Dow. So you're seeing 238 on the price scale over here. So I'm going to erase this line right here, and I'm going to erase this line. And I'll clean up just one more time by removing this line, and let me draw the forecast for next week. Again, because we're in this trading channel, we're stuck in this sideways price range. This candle from Friday the 6th is on higher green volume. Now what does that mean? Well, on Thursday we had a long shadow under the candle, which tells us the buyers are moving back in. Friday the 6th we had a convincing green candle on higher volume. See down here, the volume is increasing slightly, which tells us that the buyers are becoming more motivated. So the market is now looking a little bit more bullish. And again, I'm not saying it's going to run away in this upward movement for an indefinite period of time, but I do believe that it can move back up to fill this gap, which is going to be a gap fill resistance point. So my forecast for next week is going to look something like that. I'm going to keep it a little bit more extreme because I think the bulls are moving back in after the shortened trading week, and I think we're going to have a full week of buying coming in. So once this gap fills, we see another gap above the market, but understand that the gap rules are 80% of the time the gap will fill, and then 80% of the time after the gap fills, we generally see reversals. And that's very, very common. You can see back here there was a gap down. The gap filled, so that filled the 80% of the time there. And then after the gap filled, it reversed. So I'm expecting the same thing. When these gaps start to fill, we'll probably start to see the prices drop. And that's the diamonds. Now, if we look at the spiders, we followed a little bit more in line with the forecast from last week. I said we would move lower. This was the end of my target. So we came within pennies of my target on Monday. And then again, we bounced off of the support level. So this is going to be a race right here. And I'm going to forecast that we're going to move up in the spiders again to fill this gap up here. So this is going to be a gap fill target and a gap fill resistance point, at which time I think we could see a pullback from that gap fill point. So I'm going to leave that in place so that we can analyze that next Friday and look back at the forecast. Now, more broad-based index is the Russell 2000. You can see we pulled back on Monday, but then, interestingly enough, this is the only index where we see a long stretch of green like this. This is called the stale green light. Now on Monday we had a bullish engulfing pattern. Although we did drop to test this low, this bullish engulfing pattern resulted in higher prices for the Russell. But look right here, you'll see there's a resistance point right at that high from back on June 21st. So what I think we could see for next week is a rally in the Russell, but then a pullback from that resistance point. So again, we're going to have a fairly narrow trading range, I believe, for the Russell. And the spiders, which is 500 stocks being watched in that index, that's going to be a little bit more susceptible to the price swings. But the Russell 2000, being a more broad-based index, is probably going to stay in a more of a narrower range into next week. So that's the Russell 2000. Now, if we look at the VIX, this is the volatility index, you can see that we came very close to hitting my target last week, where I said the VIX will most likely go up to test this resistance. We did that pretty much on Monday. Tuesday was a half-a-day trading day. It pulled back. Thursday, remember, the 4th was a Wednesday, so we don't have a candle for that day. And then we have this red candle right here. What I think we could see on the VIX, because this is a fairly strong red candle, is I think we're going to go back down to test this support level right here, and that would bring us right to that low. And keep in mind, the VIX is a contrarian indicator to the S&P, so if the VIX continues to drop to test that support, the S&P will then rally, and we already talked about that rallying up into the resistance point that I drew for the S&P. So that's our analysis for this week. Keep in mind, on July 23rd, I will be heading to Chicago. The Traders Expo is actually taking place from July 21st to the 24th. I'll be speaking on the 23rd, talking about risk management. If you happen to be in the area, or if you're thinking about flying in for that particular event, please make sure you hunt me down so that I can introduce you to some of my friends, particularly John Najarian. You may have seen John and his brother Pete on CNBC for Fast Money. He's one of the celebrity speakers. John Bollinger is going to be there. Linda Raschke, Dan Gramza is going to be there. These are folks that I've been on the speaker circuit with for many years, and I'd be more than happy to introduce you to them if you happen to show up. But lunch hour is going to be right after my talk. I'll be talking about risk management with a slant on the cryptocurrency market. I'll be speaking on behalf of TradeStation. I'm going to be their hired speaker to talk about risk management. And the cryptocurrency market has really expanded into the CBOE, where they have the futures that you can trade there, and I'll be talking about how to manage risk. So I'm looking forward to that. I hope you're going to be there, and if not, just stay in tune with the Market Guys each and every week as I go over the weekly market reports. So have a great trading week next week, and we'll talk to you soon. So long.
This video segment is a small part of what the Market Guys offer through their educational products and services. If you are interested in any of our Trade Alert services, or you would like more information about our one-on-one mentoring program, simply contact us at info@themarketguys.com.